Welcome to my channel. Today we're going to be covering what's a loan and how do we get pre-approved? What kind of programs are available? How much down payment do you really need to get a loan? We'll be covering all this and more with my interview with a local lender. Before we get started, my name is Kayla Schluter. I am a licensed real estate agent with RE/MAX Results, and I work on the Locker Home Group team. If you want to know more about the South Metro, the businesses within, and of course the real estate, hit subscribe and the bell so you don't miss a video. I upload videos weekly. All right, without further ado, let's go meet Forrest Roberts from Fairway Mortgage.
Hey everybody, Forrest Roberts here, Fairway Independent Mortgage. If you've thought about buying a home, maybe you're a first-time home buyer, you don't really know where to start, you kind of want to get some information before we get to the application, stay tuned, we're about to go into that now. Today we're going to focus on first-time home buyers, how to get started, documents we'll need, different loan programs that we're going to be going through, down payments, or do you need 20% down, do you not, what options do we all have for a first-time home buyer to get going. So to start out with, we need to figure out which loan program we're going to use. There is about 5 main ones that you can go with. First one is a conventional loan. That is for higher credit scores. It's got a little lower DTI range, which is a debt to income ratio. We can get into that a little bit further on down the video. Next one is going to be an FHA loan. That one has a little lower requirement on credit scores, little higher requirement or availability for the debt to income ratio. There is also a USDA loan, which if you're outside of a major city in the rural areas, it's a great loan because there's no down payment. And so there's also, after that, there's a VA loan. So if you're a veteran, you can definitely take advantage of a VA loan. Also, again, no down payment. The fifth final option is going to be a down payment assistance loan. We're going to speak specifically on the Minnesota housing one, as that's the state that we're in here. The 3 biggest hurdles that hold people back when they're looking to get approved for a loan are debt to income ratio, credit score, and having the funds for the down payment. We're about to dive deeper into those right now. So for a conventional loan, you do not need 20% down as a down payment. You can, as a first-time home buyer, use 3% down. Also with the conventional loan, you're going to be looking for a credit score, probably 680 plus, 700 plus to really get the full benefits of the conventional loan. With that, there is a debt to income ratio of about 45%. Sometimes you can hedge a little bit above it. We do really like to stay below that, as we don't want to have all your funds going towards your house, and keep it so you have some funds for fun. Next, we're onto the FHA loan. So this one has a 3.5, so 3.5% minimum down payment for a first-time home buyer. The debt to income ratio, we can go up to 55.9, so we get a little more room of buying power there. And the credit score, it can go all the way down to 600. So 600 to 680 is what we're really looking for an FHA loan. All right, onto the USDA loan. Now these are kind of rare because they are in a rural area. You have to be outside of a metro area, so definitely reach out to me if you want to see if your home qualifies. But there is no down payment for a USDA loan. The credit score is going to be 640 to qualify, and debt to income ratio, because of the no down payment, is a little bit more limited at 41%. Next, we would have a VA loan, which is a very specific person to qualify. You have to be a veteran, meet certain criteria to make sure that your certificate of eligibility is available. But again, no down payment for our veterans. Debt to income ratio, it has a little bit of leeway. We can get up to that 50-ish area if we need to. And credit score is 600 qualifications for a VA loan. Lastly, we have the down payment assistance loan. So we're going to speak on the Minnesota Housing Financial Agency program. This one does have, there's a couple different tiers here, but the lowest credit score that you could use to qualify is a 640. The debt to income ratio there, again, there's a couple different tiers, can go up to 50%. And down payment, you really just need to bring $1,000 of your own money as your investment into the program, and the rest would be covered through this program. You can get up to $10,000 deferred, which means you don't pay it back until you sell the home, until you refinance your loan, or until you pay the entire thing off in full. And that would be deferred. The second option is a monthly repayment option. So you're taking a loan out for 10 years, but you can take up to $17,000. This will add 100, maybe 150-ish, give or take on the loan amount of dollars to your monthly payment. So that option I try to avoid a little bit because I don't want to add more to your monthly obligation every month, as we want to keep that cash flow in your pocket as much as possible. Now, these programs, they're not designed for your long-term buy every home with. They're more for, hey, I'm looking to buy a home right now. Our family's in this dire situation and we just really need some extra funds to help us get into this program. If you're going to go that route, it's a great program. Definitely take advantage of it. But think about either refinancing, selling, or switching the program as soon as you can so you can get out of the little higher mortgage insurance and kind of all these other nitty-gritty pieces, which if you want more information, definitely reach out. I'd love to talk to you about all of that as well. In addition to that down payment assistance program, a lot of counties in Minnesota have their own, either whether it's a grant or other programs that you can use to acquire some funds for a first-time home buyer. These are changing and each county has little different stipulations on what was required. So reach out to me if you have questions or looking into a certain county and we can dive into that together to make sure that Accurate is up to date and correct for you. Okay guys, so we just talked about down payment assistance. What if we can't use that financing? What other options do we have to get to the down payment that we need? Well, there's several different options. One, do you have a retirement account, a 401k that you can withdraw from? A lot of these accounts will let you either withdraw without a penalty or a very minimal fee in order to purchase for a home. Also, a family member, an immediate family member, a blood relative can gift you funds for the down payment of your purchase of the home. If you're going to do that, reach out to me. There's a little bit of layers of what we need to do. But for example, they could gift you $5,000, throw it into your account, and we can document that and use that as funds to closing. Okay, so let's talk pre-approval. What are the steps when you're saying, hey, Forrest, I'm ready, I want to buy a home. What do I got to do? First off, we need an application that is filled out. So you can do that via a mobile app, you can do that online, you can do that with a phone call with me, you can come sit down with me in the office and we can fill that out if you want. The type of information that's going to be on there is basic information to you, address, name, it'll give me information to pull credit, who is your employer, what your estimated monthly gross income is, things like that, so I can just get a baseline of where your qualifications are going to be. The next step is we're going to grab documentation to verify all the information that we placed in the application and make sure we can prove that by paper. So those are things like pay stubs, W-2s, tax returns, bank statements, a valid photo ID, just so we make sure that it's you and these are the exact qualifications that we have going into the loan. After that, you're pre-approved. Then we make sure that you're connected with a phenomenal realtor and we get you out buying homes or searching for a home and putting offers in with that pre-approval letter. At that point, you're pre-approved and then you get the fun spot. You get to go shopping. You get to go start looking inside these homes with an awesome real estate agent, decide where you want your Christmas tree to be, decide where you want your dining room table to be, and all that fun jazz. The hard part's almost over. So a pre-approval, after we're at that pre-approval stage, each letter is good for about 60 days. What I like to do is customize my letter for the home that you're going to be putting an offer on, where I put the exact address, the exact purchase price to your specific offer, and we just keep those getting updated as we're going through and making offers on homes. That said, the credit report is good for 120 days, so that's 4 months. If we're buying, or if we're looking to buy and we're going past that or getting close to that, I will be asking, or your lender will be asking to update your credit at that time. And then just to keep the pre-approval up to date, we'll just update bank statements, pay stubs, make sure you're still employed and we still have the funds that we're using to source for a down payment. So during the pre-approval process, when we do a hard credit pull, everyone's so worried about, oh, is my score going to drop? Is going to be a big detriment to my score? Really, that pull is going to be about 4 or 5 points. In about 30 days, maybe 45 days, that score is going to rebound to where it was when we initially pulled it. So it's not going to be some dramatic or big effect to your credit score. So when applying for a mortgage, one question that you might be having is my work history, my job history long enough? What all is entailed to get approved that way? W-2 employee, hourly employee, salary employee, if you have 2 years of history in the same line of work, you should be just fine with using that. If you're self-employed, maybe you're 1099, you have a Schedule C, or maybe you're an owner of a business, we will require you to have 24 months in that industry, same line of work. So first-time home buyer, maybe you're young, you just graduated college, you just got this great income-producing job. When can you start thinking about buying a home? Great news is we can use college transcripts as your work history. You were learning to do the job you're currently doing. If you've been on your job a month, 2 months, something like that, we can use that history built with your college and make that timeline work. So we got a great question. Forrest, what if I'm not ready to buy right now? What if I'm about 6 months or a year out from buying? What can I do to position myself to be ready to buy at that time? Which is a phenomenal question, and there's a couple things you can do. One, work on the credit score. Make sure that you're building that up. What you can do to build your credit score up, easiest and quickest way is have a revolving line, so a credit card, and keeping that utilization below 30% of what you're allowed to take out. That will be the quickest, most dramatic way to increase your credit score. The other thing to look at with a debt to income ratio is we don't go by the total loan volume, we go by the monthly payment. So if you can do anything with whether it's a student loan, installment loan, a credit card to reduce the monthly payment that you're paying each month by paying the loan off or maybe refinancing that loan or doing something like that, that will put your debt to income ratio in a much better position when you're looking to buy a home. And third, the last thing would be save as much money as you can as possible for that down payment. It never hurts to have extra, even if you're not using it all for the transaction. All right, guys, we just went through a bunch of the loan process. My name is Forrest Roberts with Fairway Independent Mortgage out of Minneapolis. If you have a unique question or a unique scenario, my information's below. Definitely feel free to reach out. I'd be more than happy to walk through anything or any questions that you have and dive a little further into your unique situation. Take care, guys. Have a good one.